China's Trade and Investment Information Update. John Aug 2025. Secret behind the data. China's economy just keeps chugging along. Industrial powerhouses, booming overseas sales, and strategic investments. Ready to see how imports, exports, and fixed asset spending shape the first 8 months of 2025. Let's dive in. 1. Trade. Steady growth, smarter structure. By August, the total value of imports and exports hit CNY 29.57 trillion, up 3.5% year-on-year. Exports surged 6.9% to CNY 17.61 trillion. Imports eased 1.2% to CNY 11.96 trillion. Why it matters. General trade, goods bought and sold via normal channels, now makes up 63.9% of total trade, showing healthier, market-driven flows. Trade with Belt and Road partners grew 5.4%, spotlighting China's strategic outreach. Private firms accounted for 57.1% of total trade, up 2.1 pp, proof that small and medium enterprises are powering globalization. Pro tip for investors and importers: focus on general trade channels and private sector partners for more agile sourcing and distribution. 2. Fixed asset investment. Focus on manufacturing. Janog investment, ex in rural households, reached CNY 32.61 trillion, up 0.5% overall. But look closer. Manufacturing investment jumped 5.1%, led by high-tech subsectors. Information services, plus 128.0%. Aerospace equipment, plus 112.6%. Infrastructure rose 2.0%, supporting logistics and connectivity. Real estate investment slipped 7.3%, highlighting continued cooling in property. Key takeaway: China is shifting from property-led growth to tech and industry-driven expansion, a signal for overseas investors chasing next-gen sectors. 3. High-tech highlights and opportunities. 3D printing devices. Output soared 40.4%. New energy vehicles up 22.7%. Industrial robots up 14.4%. Actionable insight: overseas suppliers of advanced manufacturing components and software should watch China's high-tech hubs. Forging partnerships now can unlock access to a XX billion-plus market in the coming years. 4. Strategic angle: Belt and Road and private sector. Belt and Road trade growth, 5.4%, shows where China's building new corridors. Investors can scout infrastructure projects across Asia and Europe. Private enterprises driving 57% of trade means greater flexibility and faster deal-making than with SOEs. Consider local mid-sized firms as partners. 5. Summary: China's first 8 months of 2025 paint a picture of steady trade and a pivot into manufacturing and high-tech. For global businesses, the message is clear: align with private, general trade players and plug into manufacturing supply chains. Like this update, subscribe for weekly updates and deep dives. Hit the like button if you found actionable insights, and drop a comment. Which sector, trade, infrastructure, or high-tech, are you most excited about? See you next time. Data source: China National Bureau of Statistics. National economy was generally stable with steady progress in August. Press release September 15, 2025.